panel discussion, which is now coming on the blockchain and digital assets and investors' perspective. Well, crypto assets or crypto have garnered significant attention from the media, financial analysts, governments, regulatory institutions, and investors over the last 2 years. We explore strategies that our most prominent VCs and hedge funds are deploying to generate investment yield with the cryptocurrency ecosystem. Well, we're looking at a VC's view of the space, building scalable blockchain businesses, crypto funds 2.0, what the next generation of crypto funds looks like, a look at the current and future trends, which is going to be covered. So very engaging panel discussions coming up. First up, for our first panelist, we've got Michael Anderson, co-founder of Frameworks Ventures. Well, Michael is a co-founder and partner at Framework Ventures, a venture capital firm focused on building the value of blockchain networks through strategic investment and infrastructural support. Before founding Framework, Michael built and sold Hashlets, the first and only NFLPA licensed digital collectibles, with co-founder Vance Spencer. Michael's prior experience bridges investment banking and consumer tech with experience from Snap, Inc., Dropbox, and Barclays Capital. Well, also we've got HEINRICH ZETLMAYER, who's the founder and general partner of Blockchain Valley Ventures. Well, HEINRICH has extensive operational and strategic experience in the growth and turnaround of small and large companies internationally, being the founder and general partner of Blockchain Valley Ventures. Then we've got also Miko Matsumura, co-founder Evercoin. Well, Miko is a general partner with GIMA Ventures, a US $30 million venture capital fund focused early stage blockchain startups, and a venture partner with Bitbull Capital, a cryptocurrency fund of funds. He's also an advisor to the Arrington XRP Capital. Also joining them is Kevin SOLTANI, the founder of GIMA Group. Well, the CEO of GIMA Group, Kevin, the GIMA Group being an alternative investment advisory based in LA and Dubai, focused on building smart city blockchain technologies and tokenized platforms for the gaming space. In 2012, Kevin's company, BitRig Builders, became one of the first Southern California crypto mining companies to customize solutions for the early days of mining. Well, this panel is going to be moderated by Du Wan Nam, who is BD APAC MakerDAO, an economist with a strong passion and knowledge in blockchain, and currently leads MakerDAO's business development across Asia. So firstly, thank you to all the panelists for joining us today. I can see Michael, I can see Kevin, I can see Heinrich, I can see Du. Thank you so much. If I may pass the baton to our moderator for taking the conversations forward.
All right, well, thank you so much for inviting, as well as thank you so much for joining. So I know that today there are many topics that we can go through, but as the common theme is regarding VC and investment, as well as it'll be great if you can also have additional introduction. So briefly introduce myself. My name is Du. I'm in charge of Asian development for MakerDAO, which is one of the biggest DeFi projects, decentralized finance. I think that other panelists can also introduce themselves, as well as, since we're talking about investment, like maybe share some of their investing strategy, or whether there's other coin or company that they're really interested in these days. I think that it can be a very short introduction, but I think that's a good way to start. So I think that whoever that wants to go first can start introduce themselves, as well as briefly talk about like some of the investment strategy or philosophy.
Yeah, I guess I'll jump in there. Can you guys hear me all right?
Yes, we can.
All right. Awesome. Yeah, thanks for everybody joining today. Kevin SOLTANI from GIMA Group, here coming from you here in Orange County, California. It's about just pushing midnight, so anybody else from California or USA, thanks for joining. But GIMA Group's an alternative investment advisory, mainly focusing and servicing blockchain tech, where we've invested, co-invested, and raised capital for blockchain projects in the last 6 years. We sold our first blockchain crypto project, I should say, and mining in 2012. In the early days of mining, we were one of the first solutions in Southern California to deliver customized solutions in the mining space. We moved on, and for the last 3 years, we've built more gaming related technologies, tokenized platforms, and blockchain solutions for the gaming space, anti-fraud, anti-cheating, anti-hacking, some KYC solutions so that the players are more comfortable in certain tournament settings. And we also were one of the founding members of the first tokenized tournament hosting platform for on the blockchain in gaming in 2018. We did an ICO, Yamzu, where that's still around and kicking and doing well in Sweden. Our main passion is to coexist the two brands of what is blockchain and gaming, and now esports is the new buzzword. So esports is even taking great advantage of many solutions within blockchain, from the contracts that are going to be coming up and the great things in AI that we see going on inside gameplay. And the last note on inside gameplay, and the beautiful thing for the tokenization, which I'm sure we'll get into as an investable tool, is the massive opportunity that's is still here and yet to come in the in-game tokenization of gaming. So excited to be here, and thanks for your time.
All right. Well, thank you for the introduction. Whoever wants to go next?
Yeah, this is Heinrich. If you can hear me.
Yes, we can hear you.
Yeah, great. So, Heinrich ZETLMAYER, Blockchain Valley Ventures. I'm since 5 years in the crypto space. I'm formerly a VP in IBM. I was one of the first investors in a Swiss crypto exchange called Lücke. We have done the first security token offerings with the Lücke coin, and continued with many other security token offerings here based, on the Swiss framework, which I think is one of the interesting digital assets coming up in the future, additional to what we had with the classic ICOs. We are a classic venture capital firm. We invest in early stage. We focus only on blockchain, and where we invest is what we call blockchain-enabled businesses. So we don't invest in cryptocurrencies or digital assets as such. We invest in companies that either benefit from blockchain trading technology, cryptos, or use the technology, the principles, the innovation to transform business models. So we have done 10 investments. We're very excited, for example, in an investment we did in a company called CoinFirm that is in the area of AML and KYC, and you can imagine that is a hot sector with the increasing trading volume, and everybody needs to fulfill regulation and needs to have some software around it. We also do token offerings. We also do classic corporate finance as a side activity, so that we help blockchain companies in early stage to get the capital that they should have. And I have to say, we're a strong believer in token offerings overall, because they have shown historically the ability to get to early stage startups money earlier for more ideas. Now that market is definitely down at the moment, so classic VCs are a requested species for startups, and in a capital constrained market. But of course, I think it will be great if we see with the first regulated exchanges then a market coming up where again we could add tokens to the play.
Yeah,
great.
Yep.
Can everybody hear me?
Yes, we can hear you.
All right, cool. My name is Michael Anderson, co-founder of Framework Ventures. We are a venture firm similar to Heinrich, but dissimilar in the fact that we focus almost exclusively on digital assets. We have a primary focus on decentralized finance and the digital networks that powers DeFi. We are early stage primarily, where we will buy or invest in a SAFT or do a treasury purchase from the team. And most of our investments have been related to DeFi finance writ large. Some of the notable ones that we've made, we led the seed rounds in Chainlink, Synthetics, most recently Aave, and soon to be announced Curve.
All right, that's great. Is it it or do we have one more person? Okay. I guess not. All right. So thank you for the introduction as well as sharing your investment strategy as well as some of philosophy. Seems like that there's a wide range of different potential investments, including like security token. Some of you guys mentioned games, DeFi, and others. So one of the, I guess, common questions that we got for this panel was regarding how the investment structure as well as like space has changed dramatically due to the recent coronavirus as well as a little economic downfall. I think some of you guys already mentioned that the environment has changed a lot, but maybe you guys can talk more about like what are some of the changes that you guys see, as well as like for those projects or companies, like what would be a good way for them to shine even in this kind of tough market to get investment. So whoever's ready, they can just share their.
Yeah, no, I guess I'll shoot it out there. Just because you know it's a cliche to say, and everybody's been hearing about it since we've been on this lockdown pandemic. But you know, gaming and all things online and digitalization have obviously taken a bump up. And so those assets, some of them being tied to some of the tokens I was talking about, and some of the companies that were doing some of the token offerings that weren't going to come out in the gambling space have been expedited probably now a couple quarters ahead of schedule. And that's a good thing, I guess, because they were ready, and we're going to see some great technologies come out for the gambling space. And I know that's not such an exciting space for the technology itself, but at least some of the things that we're building are taking care of the anti-theft and, again, the anti-fraud stuff, which we do need, as you saw in the last few days. And security is a big issue too in the gaming space. So I can say, for the purposes of what's happened in COVID and everybody being home, our business and all things that have to do with building those technologies have taken a fast track as far as it goes with the tokenization and the gambling products that these companies are now looking to service more and more users as they come online. So that's all I can say about that specific industry as what we're building.
Yeah, I would piggyback on that and say for the first maybe 3-4 weeks after everything in the United States went on shutdown, it was a lot of time spent on phones with portfolio companies, making sure everything was okay, making sure burn was looking all right, making sure things weren't dire, and expecting a lot more difficult conversations. Most of them resolved around, we are a decentralized organization. We don't necessarily have an office space. For us, it's business as usual. If not, now it's more time spent at home, and therefore more time spent at work. So that was kind of a nice surprise. And I think refactoring the form of investment into a decentralized network with a protocol with a token that underlies the value accrual mechanism, as opposed to equity in a company, which is maybe more of the traditional model. I think that changes the game in terms of what we're doing and what we're capable of from an organizational theory perspective. And that's one major difference, and I think one major advantage that we have with a global pandemic.
Yeah, and maybe from my side, I think COVID-19 had very bad influences currently on the whole blockchain scene and very good ones. On the very bad side is absolutely clearly funding has gone down. I mean, overall, we see funding in first of the half of the year nearly has been done 50%, and with that in early stage and seed, and definitely blockchain is mostly that, and it has been done in our estimates the same way. Also, as Michael said before, most VCs have simply reassessed the portfolio. Some took it faster, some other not so fast, and I think they have now time again to look at deals. And for many blockchain startups, unfortunately, let's say the moment of truth has come now much earlier because a lot of the corporates that are important for the pilot project simply have cut down their budgets. On the positive side, I think the whole COVID-19 has boosted the whole online digitalization, DeFi process space, and gave it maybe even an accelerated implementation, which we see in some of our portfolio companies. And also, I mean, we have record inflows, for example, in Bitcoin ATMs in the US. Every week is a new record of cash inflows into Bitcoin and other cryptos, which is probably a sign that many people fear inflation in other currencies. And it's also a good sign because, I mean, and we see it also in DeFi, that people trust at the moment maybe cryptos more than other, and that's a positive sign for the sector. So unfortunately, we have the good and bad at the moment.
Yes, makes sense. And actually, so I guess the follow-up question is also that despite the fact that overall market has been tough, especially within DeFi as well as gaming as well, there has been some interest, and some of them have been doing very well, at least in terms of price. So there are some people kind of worried about, is this like 2017 where it's more like a bubble? But from investors' perspective, what are some of the similarities, but at the same time differences? Like, for example, I think that Michael made a good point that you had a call with them, like you actually tried to help them as well. Compared to back in like 2017, where a lot of times they just get money, but they didn't really work together too well. So, what do you think are some of the differences you see this time, as well as like what are some like similarities?
Yeah. I'll lead off. We were investing in 2017, and that time was just bonkers. It was not rational. To your point, money was free. Now we actually get the first test of what it's like to be in a fledgling industry that's going through its first recession. It's going to force hard conversations. It has already. That's good. All of this is good. And this needs to happen if we are going to be around in 3 recessions from now. And so I think that's something that's definitely different. Things that are similar is the same level of fervor and excitement and interest. You're seeing Nexo and Celsius put millions of dollars into DeFi, tens of millions of dollars into DeFi. You're seeing the TVL, which whether or not it's a great metric doesn't matter. It's the primary metric for DeFi, and that's tripled, quadrupled in the last 6 months. I think as we enter into a global pandemic and the recession and the economic fallout from that, we're going to have low interest rates, if not zero interest rates, for the foreseeable future. Having a stable yield, whether it's from comp farming, curve farming, balancer farming, doesn't matter. It's greater than what you would get in a CD. In the United States, at least, and those are real. And so, as we see people looking for the next paycheck, people looking for their income for the next month, DeFi could be that avenue, and that in and of itself is exciting.
Yeah. I think for blockchain startups in a growth mode, it will be a difficult year. Also until the end of the year, and it's definitely not this in that regard. It's definitely, I agree to Michael, but in the regard for many of the blockchain companies, definitely not a year like 2017. This is a year where you have to fight to get your pilot projects, and you have to fight to get your money. And by the end of the year, we might enter in a phase where we have a much more positive mood against maybe we have on the DeFi and maybe a bit more crypto boom, we have such a positive sentiment that people jump faster on the projects, and that will help the startups. But until then, it's a dire period. Yeah, and the digital assets, so security token or tokenized bonds, etc., that I think will make a change. The liquidity this year will not be there yet. We will see them. And I have seen in recent weeks even more activity and more interest in all of that. But it will really come to meaningful market liquidity only in the next years.
Yeah, I think the similarities for what we saw last time are definitely the craze, as you mentioned, and that hasn't changed because the lack of education of the 80-20, right? The 80% are still uneducated, and the 20% are getting more and more educated, in my opinion. And that's a good thing for the sophistication of the projects that come across our desk, because that helps the investor make the more, you know, rash decision of where to allocate the money. 3-4 years ago, even the, you know, the savviest of investors was tough because it was such a craze, right? That the hype was real, and some of those projects are still around, giving them the respect, but many aren't. And so what I see that is different from this one is also the education. I do feel like the you know, the knowledge and that's going around is a bit more sophisticated. Even at these conferences, we've been speaking at these now. I feel like we used to say these 2 years ago, where like we'd all just speak to each other, right? So like these 6 people on this panel, or 4 people, like we were just speaking to each other. And I don't even know if we might just be still doing that, to be honest. But the conversation, the level has gone a bit up, and now in America, at least, we're talking about certain, you know, SEC regulations that are being pushed. I don't know if you guys saw today what happened with the Bank of England, or, you know, their announcement. So that's exciting, you know, as for someone that's, you know, in California but looking to move toward London for some business. That's exciting news to see what the CDTOCs can do. And I have some friends doing great things in the Bahamas and certain third world countries like that, where, you know, these type of assets are definitely necessary. And I like to just agree with you in saying that if it doesn't make it out of this recession, then we're going to have a tough time, you know, with its thesis. And this is its time to shine. And if you look at what entrepreneurs did just in Silicon Valley in the last boom, if we want to try to show ourselves in our spirit, this is the time for the proper projects to see the light of day and get out of this darkness, I guess.
All right, that's great. Thank you for sharing. And then, so also relate to that is that, so you also mentioned different countries and regulation. Relate to that is a common question that I think that we got often from projects, which is it better to raise money by selling coins, like cryptocurrencies, or by equity? So in your experience, what happened with the pro and con, as well as like there are some instances where they have both. Like, what are ways to make it more successful? So maybe both from the regulatory perspective, as well as looking at more like investment perspective as well, or like decentralized perspective as well. So.
For the equity side, if you're asking personally, what is our approach? You know, we tried the token route with especially the STOs about 1.5 years ago, which, you know, we thought we had some of the best technologies, and we only go after technologies, and that ended up being a bit of tough route because the burn rates are so high. Sometimes it's not a culmination of what's going on with the technology and how fast you can get it off the ground. In the case of STOs, it was a little slower because they got a bit more regulated in a good way. So if you're asking personally what we do, our approach is equity based at this point, because we can take a hands-on approach and become operational. With tokens, it becomes really tough because you need to be an influencer marketer rather than a helper of the technology. You know, we become salesmen of these tokens so much to the value of the technology gets lost if we can work on that sophistication side.
I mean, from my perspective, I mean, the question always depends on what is your business model. Are you B2B? Are you B2B? In what phase are you of your company? And at the very end, where is at the moment money coming from? Who is spending? Yeah. In 2017, it was very clear. You know, I mean, token were all the rage. Everybody put money into token. Of course, you go the token route and try to get money through tokens. I mean, I'm just thinking, like I said, I would be an entrepreneur. Now, at the moment, with token rounds, mostly you don't get much money. You only get money if you have your own community. So you have to bring your own buyers to the place. If you can manage that, then token offerings still work. But at the moment, most of the funding comes from VCs, comes from family offices, from ultra high net worth individuals. And for existing startups, it comes mostly from all the investors, shareholders, friends, and family that have already invested. And there are just a few new ones jumping in. One thing is clear: equity is always expensive. Yeah, it's the most expensive thing you have. But as a startup at the beginning, that's all you have. You know, you have your promise, your hope, your vision, and what you can do. So you need to give away equity. But I always, and I was an entrepreneur myself after my IBM time, in actually, Kevin, in the esports area, building ESL, yay. And so we're very careful in dilution, because at the very end, as you need the entrepreneur, now speaking as a VC, having a major stake. They need to be motivated, because I cannot do the job for the guys and girls, and they have to do it, and they need to be motivated. So you need to take care of dilution. So, but I am a fan of hybrid financing. Get some VC money so that you get senior talent on board that can help you, or talent on board that can help you. But if possible, get also tokens. I think they're a wonderful way in a B2C business model to make your fans and your users co-investors. And I think this is one of the strongest schemes for success in a B2C business and in a B2B business as well. But in a B2B business, you would like to do it a little bit later stage, when you have a bit already success under your belt and something under your belt, so that people understand what you're doing.
Totally agree, and piggyback on everything that was previously said. I'd say we take a slightly different approach. Dilution is crucial. Getting the ability to have either early stage control or operational help from a contractual agreement is also crucial for us. But I'd say the two forms that we usually invest in is either a SAFD, which is a translation from the SAFE, which was put up by Y Combinator for equity in traditional startups. But it includes a trigger that could translate to tokens eventually. And so you're both talking the equity valuation and the total fully diluted token valuation when you're negotiating that instrument. And one of the other interesting models that we've seen is just a straight equity round, and then having tokens distributed to the cap table in the same way that Andreessen bought equity in Compound Labs Incorporated. Compound Labs Incorporated owns 49% of Comp tokens. Therefore, do the math on how much Andreessen owns of Comp. And that, I think, is an interesting model. I think we're moving away from that a bit as we move into full decentralization. Abra, some of the recent SEC announcements means that having a centralized entity means that you have a target on your back. I think we see a lot of full decentralization where people, teams start shedding their legal entities, getting rid of their bank accounts, closing up shop in that respect, and moving to a full decentralization, DAO-based decision-making model governed and owned by the community.
All right. Well, thank you for your insights. And that's like you guys share. I think that there's definitely pros and cons, as well as it's the very early stage. So we have to see how it goes. But actually, one of the interesting key points that you guys mentioned was both decentralization as well as business model. And I guess that this is more question for Michael, but especially within DeFi, there were a lot of questions about, well, it's very different from other sectors in a way that there's actually a real business case, as well as real, TVL and things like that. But in your opinion, do you think that it's hard to have an efficient model, like an efficient business model with decentralization, or that's something that is doable? Because right now, I guess within DeFi, a lot of people might argue that it's not like a full DAO per se. But then, is it something that in the future can be, it can work it's very decentralized, but it's also very efficient in terms of business?
Great question. I'll maybe pick and choose a couple of different points there. So I think one of the things that you highlighted is the trade-off between efficiency, which means output from a core team, and decentralization. The more decentralized a core team is, the less output they're going to have, because the faster cycle times it's going to take to make decisions like you would have if it's a small core team, just like you would have with any organization. As you get bigger, decisions take longer. So that's the first one. I don't think a team should be fully decentralized from the beginning. you should have some mandate of where you're going and a plan to decentralize over time. Most of our portfolio companies do that. And in terms of value capture, I think in 2019, we saw two primary token economic models that work. The first is Maker pioneered this, the buy and burn. It's a great model. It's capital efficient. It's tax efficient. It's a great way to distribute cash flows to token holders. The second, which is synthetics, is a dividend issuance for active participation. And that is a great incentive mechanism for, once again, distributing cash flows. It's done in a different way, and it prioritizes people who are participating. But for the first time now, since whenever, we now have a valuation model that someone can build in an Excel file that gives us a DCF of what these tokens could be worth with certain assumptions. And it just so happens that finance is the largest market in the world, with just about the least amount of innovation over the last 30 years. So you combine kind of all three of those things, and it's no question why DeFi seems to be taking off right now. Can you build an efficient model? Even if you're talking about basis points on a $10 billion flow, that's a huge, hugely valuable network in terms of valuation. And so yeah, I think we're going to start to see, as things get more efficient, layer 2, ETH2, we're going to see a lot more value pump in. Yes, I think we'll see a lot more value capture as well.
Well, thank you. And then it's related, but I guess this focus more for Kevin. So within gaming and also blockchain gaming, we saw there are many different cases. Some are also very successful. But in your opinion, what do you think will be the new future for blockchain gaming? Like, for example, before it was mostly collectible. These days, we also have games like X Infinity, where you can play the game to earn rewards, which also has been pretty popular. But do you see what are like some of the new trends that people don't notice yet, but which you believe that it's going to be big in the future? Or it can be the same old setup, but some way more playable or like more fun, So that kind of trend. If you can share it, that'd be great.
Yeah. First of all, Heinrich, nice chair, and pleasure to meet fellow. I saw that at the beginning, and then I see your sweet artwork in the background,
Yeah.
So we'll have a combo after. But honestly, I think the exciting thing about the blockchain technology, realistically, is the anti-hacking, anti-cheating. Right now, one of the largest games that's a free game is Call of Duty Warzone, and that's got a big hacking problem right now, and that's the large player prize pool that's going to go on. That's just for the technology side itself, because it's super easy to implement, which we've done, as I mentioned, for the last 3 years in Yamzu. But what I think is right now, right in front of our face, but we need 10 or 15 more of them, and you're about to see them come in troves, are, like I said, tokenized assets within the game, in-game currencies. Right now, you have Fortnite with their V-Bucks, and billions of dollars in mobile microtransactions are happening. And it's going right in front of our eyes. And these are tokens. Let's not mistake the fact that just because they are not exchanged on popular exchanges, these are just as powerful as anything we've built in our industries. And they've been doing it right in front of us for years now. And I think we're about to see many more of those. And we've yet to see in-game currency exchanges, in-game skins and items and things like that can be hosted on the blockchain and tokenized at the same time. I just give a plug for what I might butcher their name, Socios is doing, and they're giving voting rights to essentially teams. So they've tokenized Paris Saint-Germain, one of the largest football teams in the world, and for the purposes of tokenizing everything from merchandising to voting rights. And I think in gaming, and that's a bit of it, right? That's a gamification of sports. We're about to see much more of those tokenized assets come out. So it's an exciting year to come in gaming.
Oh, that's good to hear. And also related, but different question for Heinrich would be, so it is my understanding that the company talks with a lot of traditional companies as well for interest in blockchain. And so far, based on your experience, like, why are they interested in blockchain technology, and what are some of the ways that you've been working with them to try to better understand blockchain technology as well as adopt it? So this is more for traditional companies that are interested in blockchain and trying to adopt it.
Dude, thanks. I mean, first, family offices and many investors that so far have nothing to do with blockchain. I mean, why are they interested? I mean, first, they look for better returns, so they look for venture capital allocations. Second, they look for the newest technology trends. And in the newest technology trends, besides artificial intelligence and biotech and these things, blockchain is one of the key trends. And with blockchain, also the next wave of innovation in fintech. Now, the challenge is, and you rightly said that, is education. I mean, honestly, many family offices to whom we speak to, they have a basic understanding, or sometimes not even a basic understanding of Bitcoin and cryptos and what it is. So we always have a big job first to do in educating. Some others have already purchased Bitcoin, tried it out, know a little bit more, but we then educate first about the sector. How many companies are there in blockchain? Where are the hotspots, be it by sector, be it by geography? So it's a big education task. But once this is done, I think everybody is in fact ready for action. But then people, again, they are not only interested in a cool idea, they're really also interested in the financials and how is the business plan looking like, and what you have already as proof points that the business plan is working. So it's a mix of education and then presenting your company as a very attractive investment in a very attractive market. So sometimes you have to force actually more your story as a company than your story as a blockchain innovation.
All right, sounds great. So we looked at investments from many different angles, and I believe that we both have many different views on it, as well as an exciting future for it. So I think that we can try to wrap it up. But before we close it, is there any remark that you wanna share with the audience? Such as what you think will be really big in the future, whether it's a trend or others that you believe that the more audience should study about it or like learn about it?
So I believe there are no audience questions right now for the panel. Would there be any closing statement you would like before we depart with?
All right, so I think that's wrap up the panel discussion. Thank you all for joining, and it was a pleasure.
Thank you so much. Thank you to the entire panel. Thank you once again.
Thanks, Stu.
Yep, thank you.
Thank you. Have a good one.